this is how a lot of the deductions and credits and kind of the standard deduction, a lot of the kind of major deductions and credits that you're used to at this moment for the last several years operate right now, and it is set to expire. I'm going to talk about how 3 changes that have been proposed by the Trump administration could affect your bridal shop. So, whenever there is a change in the White House, these changes can affect the macroeconomy. So, what do I mean by the macroeconomy? I mean supply chains, interest rates, inflation. Any of this sound familiar? Unemployment rates, consumer behavior. And when there are changes in the macroeconomy, you as a business owner want to think about how do these macroeconomic changes affect the microeconomy. So when I say microeconomy, I mean the behavior within your shop, both those business decisions that you're making and the intersection of those business decisions with your employees, with consumers. That's the micro. So how does the macro, big picture, affect the micro? And so understanding how that macro economy connects to your shop's microeconomy is essential for success. First, let's talk about tariffs. There's a lot of background here, a lot of context. I'm not going to go into all the background and context, but the tariffs that matter the most for bridal shops really relate to the BRICS countries and some of the conversations around the BRICS countries, specifically China. I don't need to tell you that the tariffs that are most important for bridal shops relate to imports coming from China, and I've seen different numbers float around with regards to what potential tariffs might be put in place. And this is really a political play in terms of what the administration is going to land on. So we really don't know yet what is going to happen with regards to tariffs with China, because these particular tariffs are political strategy, the ones relating to China. Okay, so what I am going to say is that any tariffs that go in place, we do know what the impact is going to be to the industry, and that is increased costs, increased costs of goods, and that can take two forms. So, two forms. One is direct costs and indirect costs, and those increase in costs can be related to your sample inventory as well as your cost of goods. So those direct costs can be the cost to the inventory itself as a result of the tariffs. So if there's a 10% tariff, then we're clear that it's just 10% on the goods. If it's 100%, it's 100% on the goods. So that's pretty clear. Indirect costs is a result of, for example, supply chain issues, having to redirect supply chains to other countries, resulting in operational costs. It could be resulting inflation, that kind of thing. Those are indirect costs. Then the other thing that we want to consider, so you could have your increased sample inventory costs, but also cost of goods. And then let's talk about how to prepare for these increased costs. So there's a few things to consider. Number one is just having a bead on your suppliers. What are they doing? How are they responding to the tariff issue? I mean, once this starts to firm up and we have a better idea of what's going on, are they going to continue to import from China? Are they rerouting their supply chains? How is this going to be affecting times, things like that? And then, are you doing any negotiating with those vendors in terms of offsetting those costs creatively? The second thing is communicating with customers. And what I think is important here is understanding that these costs are affecting the industry as a whole. They're affecting your vendors, and that's trickling down to you, and then that is inevitably going to have to trickle down to your customers. And so you can't really think of yourself in a vacuum here. You're in this with your vendors, you're in this with your competitors. And so when it comes to communicating these costs to the customers, at least in terms of the direct costs, so if there are tariffs that are put in place, what is going to be the industry standard for communicating these direct costs? And I just want to give you an example of a store A and a store B to illustrate this point. So, store A, for example, store A decides to not raise their prices in response to tariffs. What happens with store A is, they're fearful of raising their prices, they're fearful of passing that on to their customers, whether they're transparent about the tariffs being part of that price increase or not. What ends up happening is that their net profit will decrease. And if their net profit decreases, they may not feel that immediately, but they will feel it over time, may even eventually become insolvent or go out of business, depending on the depth of the cost of the tariffs. And so there is a long-term cost to that. Let's compare that to a store B scenario that does decide to increase the prices. Well, they pay a short-term cost in terms of potentially losing sales to store A. So it may seem that store A wins in the short term, loses over the long term. Store B loses in the short term, loses those sales, maybe wins over the long term because they're protecting their profits over the long term. Now, ideally, what I think that we want in the industry is to have a standard of how to communicate those tariffs, how to increase prices and communicate those tariffs as an industry standard to customers so that we don't have this win-lose situation where or a lose-lose situation where everybody is losing. And so, because we are in this together, you're in this with your competitors, and I would argue it's even worth reaching out to your competitors and establishing the standard along with the competitors in your area, because this is affecting everybody. If this goes into place, it is affecting everybody. And so working together to make sure that everybody is solvent over the long term. Next, let's talk about no tax on tips. So the current situation is that tips are considered taxable income under US tax law. So what this proposal suggests is that tips are no longer taxable, and this is to provide some relief to service workers. So this change would increase take-home pay for your employees that are receiving tips. So this could simplify some of your payroll processing, or it's at least going to change your accounting. But what I want you to be aware of is that there will be a change in your accounting. And so you need to be aware, you need to be following this legislative change. You need to be aware of when this transition happens and make sure that you know the date that it changes, and you make that change in your accounting, in your payroll processing, because this is an important compliance issue, that your employees are aware of the changes, and that if you do have employees that are receiving taxes, just get accounting help if you need the accounting help. So if you have an accountant that's not us, reach out to them. If we're your accountant, reach out to us. But this no tax on tips will affect you if your employees are receiving tips. The third change I want to talk about is the Tax Cuts and Jobs Act. And you probably didn't even know this existed, but this is how a lot of the deductions and credits and kind of the standard deduction, a lot of the kind of major deductions and credits that you're used to at this moment for the last several years operate right now, and it is set to expire. So this introduced a 20% deduction for qualified business income. It also set the standard deduction at a higher rate. One of the major things that happened there is that the individualized deductions went away for a lot of people because it just made sense to take that standard deduction. So there's a lot of other stuff in there, but this is set to expire. Now, what we expect is that this is probably going to be renewed, might be changed slightly. Maybe there's going to be some enhancements, but we're going to be keeping our eyes on this, how it's renewed, any kind of changes that go in. But this was a major tax act that affects the taxes you pay, how you pay them, what deductions and credits are in place. So navigating changes requires working with your accountant, the person filing your taxes, and also what we're doing in the books. So that is just something to keep your eye on. You want to be maximizing your deductions with the help of your advisor and just proactively adjusting your financial strategy ahead of time when we get a beat on what is happening there. It's hard to keep up with all of this on your own. If you want to prepare for what's ahead, just subscribe below and stay up to date on all the tips, all the information. I'll help you out with that. If you want to dive deeper on any of these topics, just comment below and I will dig into that. Or visit us at bridal.vision and I will see you soon.